I think every asset manager we talked to in the past year has wanted to get in. So the conversations with those asset managers 2 years ago were, why would we do this? And now they're, how do we do this? And when do we do this? And how, it's become inevitable. They see the momentum, they see BlackRock in the space, they can't fall behind, so they've got to jump in.
I was going to say trading has to be just the most hands down lucrative approach to making money that anybody could embark on. And if you're not actively day trading or making an attempt to learn how to do it, I highly suggest you think or consider doing it. It is a skill that once mastered properly, I mean, literally just opens a door to endless opportunities. I made $600 this morning off that Bitcoin call out that I gave you guys this morning on a Zoom call. It's like it's the 10th of March. And if I honestly wanted to not work the rest of the month, $600 is plenty enough for me to cover my living expenses. So it's just one day, of proper market analysis, patience, bring in proper sound risk to reward, technical analysis combined with fundamental understanding coupled with the deltas. It's too easy, guys and gals. Seriously. Um, so we're going to pick up where we left off from our earlier Zoom call this rising. On that Zoom call, we had discussed and we had talked about some of the factors that had previously weighed on risk assets. We had talked about in detail what we needed to see, ideally to see a turnaround in market optimism, which is currently unfolding before our very eyes today, as the market cap as of time of recording is up around about $120 billion, I believe. 132 billion as of time of recording. We talked about this current market optimism that we're seeing not necessarily being a solidification at the bottom is in unless we continue to see positive developments day after day after day, further on later on this week, and then heading into next week, so on and so forth. What I'm trying to get you guys to see is that right now we're in a very reactive market environment. And anybody that was paying attention to the Zoom call this rising, you can clearly see not necessarily how easy it is to determine and decipher these things, but how reactive you need to be. Imagine all the retail participants that are getting completely caught off guard, marrying a sell bias because the markets have been relatively downbeat. And then as soon as fundamentals shift, not knowing how to determine what those fundamental shifts are and being able to react to those conditions. So I tried in an attempt to do that for you guys this rising when the data came out. I read the report thoroughly for you all, gave you guys a couple of snippets that I was paying attention to from about 7:30 a.m. to 8:30 a.m. this morning, painting a clear picture, going over my highlights and picking apart what my bias was for the day. Did the 77,000 range or a sustainable hold above this 80,000 delta range, leading to a break in this previous and most recent bearish lower high. Like job openings changed significantly by 8 million in January, right? It would need to have like an uplifting tone, but was down by 728,000 over the year. The job openings rate at 4.6% changed a little over the month. The number of job openings increased in real estate and rental and leasing. In January, the number rate of layoffs and discharge changed little. Again, key vocabulary to 1.6 million, respectively. Layoffs and discharge decreased in mining and lodging. At the end of the day, nothing significantly sparking any sort of extreme optimism. However, it doesn't necessarily weigh on recessionary fears. So I'd say that intraday buys are going to continue. We're going to continue to see profit taking from sellers, primarily because this doesn't necessarily feed into a recession. Shows slight optimism with a slight increase from previous readings, but this revision to the downside still shows some slight caution in labor market figures. All right. My bias proved accurate, very simplistic, nothing extensive, no magic indicators, nothing like that, just simple sound technical analysis, seeing that buy momentum was coming in at around the delta zones, coupled on top of that with some economic data from the US front that did not continue to weigh on recessionary fears. And then on top of that, we also talked this morning with the meeting from some U.S. representatives in Saudi Arabia. I believe it was the meeting was this morning. And we kind of just talked about how if we saw positive developments from this rising, if we saw non-recessionary fears, if we saw de-escalation of tariffs and trade war implications, that it was most likely going to result in positive price action. We did not overextend ourselves, draw Fibonacci extensions on the charts and say, oh, price action is going to go to the freaking moon and we're going to see a massive blow off top. None of that stuff. Over exaggerating our predictions and our reactive analysis in these markets. We're just simply reacting day by day accurately. And I cannot stress enough, now's the time to be paying attention. So let's cover this, today's report. This is the Asia session report in addition to this rising Zoom call. If you did not watch this morning's Zoom call, go check it out. Very insightful, just kind of showing you all what I pay attention to when I'm reading my fundamentals, what I look for, key vocabulary, key sentences, kind of how my brain works. Let's change the date on this, March 11th. All right, so I'm just going to thoroughly read through this. Then towards the end of this, we're going to go over some price projections on Bitcoin and the total cryptocurrency market cap. And then I'll lead you guys into tomorrow, and I'll hop on another Zoom call with you guys tomorrow after the inflation data comes out so we can talk about it and digest it. Over the past few trading sessions, our analysis has focused on four primary concerns weighing on risk assets. We had tariff uncertainties, geopolitical tensions, inflation worries, and recessionary fears were the primary factors weighing on risk assets. This report does not really incorporate the Bank of Japan and the Federal Reserve policy divergence, but keep in mind that that is also something that has recently weighed on risk assets, is the propped up demand for the Japanese yen, considering that right now the market is heavily anticipating 2 interest rate hikes from the Bank of Japan, which tends to make the yen more attractive and appealing, coupled with upbeat Japanese activity and higher inflation comparative to the US economy, making the dollar less attractive as the markets are pricing in a higher probability that the Fed is actually going to cut rates later on this year as of right now. That's not something that we talk about in this report, but still something that we need to be mindful of. We noted in previous reports that any positive developments, such as easing recessionary concerns or peace agreements around trade wars and geopolitical tensions, could reignite market optimism intraday. Indeed, today's intraday price action reflects some of that optimism, with the total cryptocurrency market cap bouncing by over $130 billion from recent lows as of time of recording this video breakdown. Again, nothing to get overly excited about. We need to continue to see these positive developments unfold in order to see buyers really overpower sellers and take back their positions in this market. So first, we're going to talk about the US jobs data that we got this morning because that was the first thing that we talked about on this rising Zoom call. We had better than expected job openings, which we talked about in the previous report. I specifically mentioned to you guys that if the jobs figures come out above the forecast or above previous readings, it was most likely going to ease recessionary fears in the moment. It hasn't solidified easing recessionary fears, but it's a slight upbeat consensus from previous data reports that we've gotten. So the latest US JOLTS jobs opening and labor turnover survey data showed vacancies rising from 7.5 million to 7.7 million in January, exceeding the forecast of 7.63 million. While this does not necessarily point to a robust or upbeat figure, it did help temper recession fears, supporting a mild risk on sentiment in the markets this rising, or at least during New York session. Here you can see a little snippet of the fundamental report that I gathered that from. And this rising on a Zoom call, I mentioned this for you guys live during our session. When this data came out, I opened the report, I analyzed it for you guys, and I told you all that I was looking to long Bitcoin. And I gave you guys my overall analysis and what I was going to be paying attention to. I even specifically said that I would like to see Bitcoin come and attack these intraday highs here. Logically speaking, again, no indicators, no magic Fibonacci extensions, nothing, just using simple sound logic, delta zones, and fundamentals. If the market makers are not going to target lows, i.e. sellers are not in control anymore, we're seeing buy interest pick up at institutional deltas, and we also see supportive fundamentals in favor of risk assets. The only other logical area for the markets to go is to attack liquidity that exists above highs. And I specifically told you guys that I was looking for price to come up here and target these areas. You can imagine that any over-leveraged sellers that had stop losses above these highs were most likely liquidated today when spread increased in this bullish candlestick poking slightly above these highs, liquidating any people who had stop losses at break even in these sell positions or any open over leveraged sell positions here. All right. So just very simplistic, sound technical analysis. All right. Nothing extensive. Profit taken, intraday trade out of the way. And I could honestly not trade the rest of this month if I wanted to. All right. Which is again why I encourage you guys to learn how to trade. You don't have to sit here and be at your charts all the dang time, 8 hours a day, unless you're in like the beginning phase of accumulating the information. There's clearly a learning process. But if you really want to come to the markets once per month and make a sustainable income, you can, right? People in our community are living, breathing proof of that, I myself included. To continue on, de-escalation of the US and Canada trade dispute. So first we had the upbeat economic data from the US. Nothing extensively upbeat, but again, it slightly alleviated recessionary fears today. Again, that could change later on this week or next week. So the initial tariff escalations, we had tensions flare when US President Donald Trump announced 25% tariffs on Canadian aluminum and steel imports, and escalations seemingly in retaliation for Ontario's new duties on electricity exported to New York, Michigan, and Minnesota. Trump even threatened to double that tariff to 50%. Within hours, however, President Trump backtracked on the proposed double tariff amid market and internal cabinet pressure. Simultaneously, Ontario Prime Minister Doug Ford agreed to suspend his retaliatory electricity export tariffs, and U.S. Secretary of Commerce Howard Lutnick initiated emergency trade talks with Canada. While the situation appears to be de-escalating for now, it remains a potential flashpoint that could reignite market volatility if negotiations stumble. However, right now, the market perceived this de-escalation today as positive, and we saw sellers taking profit and some buyers starting to show their face again. So keep in mind, we talked about this in previous reports. We specifically discussed that if the market faded any of these trade wars and trade escalations as not as severe as previously anticipated, or if we saw any peace agreements or any collaboration between these major jurisdictions, it was most likely going to spark market optimism. And we're seeing that reflected in today's price action again. So that kind of scenario day by day is going to continue to play an important role. Then we also had prospective ceasefire talks. So we had geopolitical tensions, Ukraine, Russia developments, which we also talked about on previous calls and on this rising Zoom call. President Trump hinted at a potential ceasefire between Ukraine and Russia, suggesting that both sides could agree to a 30-day interim truce extendable by mutual consent. Ukraine has reportedly agreed to these terms contingent on Russia's acceptance. The impact that this had, investors generally welcome any positive diplomatic steps that reduce the risk of broader geopolitical instability. However, the details still remain vague, and Trump's statements about inviting President Zelensky back to the White House indicate that full clarity on the ceasefire is still developing. So even though today this was a positive step, we still need to see further positive developments and headlines to fully alleviate any sell pressure and escalating headlines that could come about if we do see this turnaround and result in anything negative. All right, so just be mindful. I incorporated that report from I believe it was the Telegraph here. You guys can thoroughly read through that if you'd like. On top of that, we've also had inflationary concerns. So now our attention is going to shift towards tomorrow's CPI data. President Trump this rising noted that egg and gasoline prices have come down, though available market data conflicts this and does not show that these declines have happened yet. Only partially offset previous prices increase, particular for gasoline, which has seen 3 consecutive monthly gains. So the data is contradicting President Trump's statements. So we still need to be a little bit more data dependent surrounding this, and we can't just take opinions right now. All right. So that means that our attention is going to be heavily focused on the upcoming CPI and PPI, and then also on Friday with the inflationary expectations. So markets are closely watching tomorrow's inflation readings. Current forecasts suggest a slight dip from previous levels, but any surprising uptick would revive inflationary concerns and could dampen risk sentiment. Right now, the consensus estimates that core inflation rate month over month and year over year is set to come down slightly from previous readings. One thing I want you guys to also pay attention to is that tomorrow the data could come out slightly below the market forecast. But if we were to see any upwards revisions, that could dampen market sentiment. So just be cognizant of that. I'll make sure to talk about this tomorrow in our fundamental update. So what to watch going forward in a broad nutshell? Trade war headlines. Any renewed conflict over tariffs, especially if talks between the US and Canada falter, this could spark fresh risk-off moves in the market. Number two, the Russia-Ukraine peace progress. Any positive news on a ceasefire or de-escalation could sustain the risk-on mood, while any breakdown in negotiations may reintroduce geopolitical uncertainty. And number three, inflation trajectory and central bank policy divergence. Higher than expected CPI or PPI prints. However, we're not there yet, so we don't want to get too ahead of ourselves. PPI isn't until Thursday, so we'll talk about that tomorrow, taking it day by day. But higher CPI prints would stoke fears of aggressive monetary tightening by the Federal Reserve or the Fed possibly keeping interest rates higher for a prolonged period of time. And then also, this would contradict policy divergence between the Fed and other major central banks, like the Bank of Japan, which still remains a key risk factor. Number four, and last but not least, economic activity and recessionary signals. Despite the upbeat JOLTS figure today, sustained improvement in broader economic indicators is still needed to alleviate recessionary concerns, which are still lingering as of time of recording this video. You guys need to remember that a single day of positive data does not guarantee the market bottom. So right now, the market is showing signs of optimism, driven by easing trade tensions, a potential Ukraine-Russia ceasefire, and modestly supportive U.S. economic data. However, any adverse surprises, whether a reversal on tariff agreements, any escalations in tariffs, a flare-up of geopolitical strife, or hotter than expected inflationary figures could quickly renew selling pressure on risk assets. It is crucial to remain vigilant, closely tracking incoming data, and watch for policy signals from central banks. Sustained market stability will require continued progress on trade negotiations, meaningful signs of de-escalation and geopolitical flashpoints, and evidence that inflation is moderating without undermining economic growth, right? So that is our primary report as we end today. Let's just talk thoroughly through some trade ideas and setups. Keeping in mind, I want everybody to really understand that in order to become a successful market participant, what you'll see amongst mainstream retail influencers on the internet is they tend to predict the markets. They call out these bullish price predictions that never tend to come into fruition, or they'll give an analysis that never tends to materialize. And the reason is because they're predicting. We cannot predict the markets, but what we can do as sophisticated and mature retail investors is we can react to changing market conditions. And when you take a more mature approach in these markets and you become a reactive market participant instead of a predictive market participant, you become much more effective and efficient in this space, regardless if you're a DCAer, a trader, or a DeFi enthusiast. When you can react to the changing market conditions, the volatile price swings and the fluctuations in this market, that is when you become lethal. All right. So that is why, just to solidify and full circle things, I cover both buy and sell scenarios because nobody knows what's going to unfold the next day. But as long as we understand the general environment that will be created based off the fundamentals and the technicals combined, we can react to bullish and bearish price action by adjusting ourselves accordingly once that information comes out. All right. So let's just take a look at Bitcoin's price action. As I showed you guys this rising in the Zoom call, I was looking for some intraday buys from the 80,000, give or take a couple of dollars to the upside psychological level, or the deltas that Scalper had put out. So let's just talk about the bullish scenario first. What would create scenarios where we see Bitcoin hold these intraday higher lows and create some type of scenario that looks like this, whether it's we see a slight pullback or some profit taking as we roll into Asia and London session, creating a slight market retracement down into the delta zone again and a bounce higher, or continued buys from where we currently sit to take us back into the sell deltas at around $87,000 to $88,000 per Bitcoin. In order to see this type of price action, we would need to see this list of fundamentals come into play. Now, all of these fundamentals don't need to come into play at once, but ideally, we would like to see these things materialize, and it would drive market sentiment back towards a risk-on market environment. That would be if we see easing trade tensions, i.e., any de-escalation or peace agreements or peace talks of tariff disputes or any new trade agreements, positive geopolitical developments, progress on peace talks in Russia, Ukraine. Obviously, of course, we can't ignore any positive developments surrounding the Middle East, but that is not a primary headline right now. Any reduced global conflict, as I mentioned here, cooling in inflation, figures lower or stable inflation data that reduces rate hike pressure, or that the Fed is going to need to keep rates higher for a prolonged period of time. Any strong economic indicators, however, tomorrow we don't have any of those, but we could see any mentions from, you know, I don't know, Lutnick. We could see any mentions from Trump. We could see any mentions from any major U.S. economic doctors come out and say something about strong economic activity, and that could ease recessionary fears. And then, obviously, of course, any regulatory clarity, any favorable or transparent policies from government officials or any regulatory bodies, any approvals of ETFs, like I believe Franklin Templeton today filed for an XRP ETF, if I'm not mistaken. So any positive developments surrounding ETFs or any regulatory developments that unfold. All right. These would be the scenarios that would most likely create sustainable bullish price action for Bitcoin. Right now, I'm just primarily focused on us holding above this most recent delta zone to look for buy continuations in this favorable market environment to take us back up into the first sell delta at around $88,000 to $89,000. These bullish factors for crypto will remain throughout the rest of the week. So I don't want to get too repetitive, but we'll talk about this again in tomorrow's Zoom call. All right. These will be the ideal scenarios that I'd be looking for. A slight retracement after some profit taking rolling into Asia and London session to facilitate some better discounted buys to take price back to the upside, or a break and a retest of this most recent high on the lower time frames to scalp Bitcoin back up into these intraday highs at around $88,000 to $89,000. If we don't see these fundamentals play out and we see the inverse, looking at some price action like this, where instead of breaking into new highs or intraday highs on Bitcoin, not new highs, but you guys catch my drift, and this turns into an intraday liquidity grab above previous sellers, and we see profit taking from buyers, and we see sellers overpower, pushing Bitcoin's price back down into intraday lows or revisiting this $80,000 range, i.e., sell pressure continuing to pick up, that would most likely result from these fundamentals. Any renewed or escalating trade wars, any tariff hikes, stalled negotiations, or new economic sanctions, any heightened geopolitical tensions or conflict flare-ups, any uncertain ceasefire terms that makes the market a little bit iffy about peace talks really fully coming into fruition, any rising inflation data that significantly shows that inflation is remaining sticky and troublesome, which will require the Fed to keep interest rates higher for a prolonged period of time. I talk about economic growth indicators here, but we don't have any economic data on the doctrine for tomorrow, so it's no need to pay attention to that. Any uncertain or restrictive regulations, right? Any crackdowns, any major announcements from regulatory bodies, any pushback on ETFs, diminishing market optimism, so on and so forth. All right. As of right now, the current market environment, as of time of recording this video breakdown, is still risk on. We're still seeing intraday buyers in control. What I am paying attention to, though, is that on the higher time frame, on the daily, if we go and we look at the daily price action, we have yet to break above the previous daily lower high, right? So even though on the lower time frames, you can see this one daily bullish candlestick looks extremely optimistic on the lower time frames, we ideally would need to break above, give or take, roughly around $92,000 to $93,000 on Bitcoin to solidify that on the daily time frame, buyers are back in control. Reason being is because this is the last intraday lower high, right? And so even if, given the most recent market optimism, we continue to see 2 days of bullish price action, we could still see sellers that existed here in this area simply just taking profit, allowing for buyers to come in, that when price is at a premium, this is why I'm telling you guys not to marry a biased, horrible data could come out here in this area and spark all the same uncertainties, fear, and doubt that we've seen over the past consecutive couple of trading days, and we could see this overall downtrend continue. And the market was simply just positioning itself at a premium from where it previously sold from. So even though on the lower time frames right now, I'm intraday bullish on Bitcoin, ideally on the higher time frame to solidify that this is the bottom and that we're going to continue to see higher prices, we need to see a break above the $90,000 to $92,000 range on the daily time frame. right? For the total cryptocurrency market cap for everybody else that does not day trade Bitcoin, let's just take a look at that real quick. It's pretty much the same thing. I'd say that the total cryptocurrency market cap is reflecting Bitcoin's price action almost identical right now. Same setup. We have this intraday high on the daily, which is the previous or the most recent lower high. If we're just tracking price action, lower low, lower high, lower low, lower high, equal lows, lower high, lower low. Even though on the lower time frames, like if we were to go look at this on the 5 minute, this looks extremely bullish, right? But on the daily time frame, ideally to solidify that the bottom is in, that the market sentiment can start to shift back and see buyers back in control on the higher time frame, on the total cryptocurrency market cap, we need to break above 2.9 to $3 trillion. Interestingly enough, that was our primary threshold for over 4 months, starting in, I believe it was October, November, December, January, excuse me, 5 months, and February, where that $3 trillion mark held for quite a while. Or was it from November to February? Yeah, here, right, where you can see a break and a retest of $3 trillion. Then in December, $3 trillion remained relevant. In January, we had a retest of $3 trillion and remaining relevant again. And then in February, we also held slightly above $3 trillion for pretty much the vast majority of February before finally tariff implications and uncertainty flooded the market and the market finally sold off before retesting 3 trillion and breaking back down below it. So on the higher time frame, in order to solidify, in my personal opinion, that the bottom is in or the local bottom is in, we need to see continued bullish fundamentals and we need to see a sustainable break and retest of 2.9 to $3 trillion and the bullish fundamentals continue. Until we see that continuing to push up into premiums, we need to be very sensitive, very careful, especially if you guys are taking leveraged positions and you're holding them up into these areas. All right. Outside of that, that's all I got for you guys for a quick Asian session update. Very simplistic, very accurate with the analysis. Make sure you guys are reading this, and I'll make sure to cover you guys tomorrow with another report after the C.